Today's trade recap will consist of the one trade that I took, and I'll give you guys a full breakdown of my entire thought process for this New York AM session. Always the first thing I do to determine a daily bias is start on the 1 hour time frame and mark out all my draws on liquidity. So as you guys can see, every single line here is either a high or a low. These are all highs up here, and then these are lows. I also marked out these, but I deleted them as price kept going lower and sweeping them out. On top of that, I also mark out any high time frame fair value gaps, equilibriums, order blocks, and SMTs as well. And in this case, we have this on ES. That price tapped into, filled, and went lower. And then on NASDAQ, it didn't quite make it up there. So coming down onto a lower time frame, closer to market open, we zoom down into the time frame, the 1 minute and the 5 minute, and we see what's going on. The market opens and we instantly just dump a lot. From here, obviously my bias was going to be more bullish because after we took out London low, we had London high and Asian high resting, as well as these data highs from the 8:30 a.m. news that had come out earlier, and we had more low resistance liquidity to the upside than we did to the downside. So I was bullish and I was trying to find a bullish entry. I forgot to show you guys what the session liquidities did. So Asian session pretty much consolidated, London session manipulated lower. So in this case, I would be expecting New York to continue up higher. But again, just because I think I have a bias in mind doesn't mean that price is going to play out. I react to what price gives me. So another thing that I would like to add is, like, as you guys can see, price goes down a lot, right? It just floods. We don't get really any retraces, so I can't catch shorts. But it's honestly better to catch longs when we go this low, because you know that at some point price has to do at least a little bit of a retrace. Like, it's not just going to keep doing small 2 candle retraces and continuing lower. Like, it will at some point give you a solid enough retrace to catch a trade. So that's what I was trying to do today. So essentially, you're trying to find the point where price will reverse off of on these days. It's usually going to be a really high time frame level. In this case, what stands out to you guys? You see that there's a really big wick of a candle here on the 1 hour time frame, which is probably caused by like news. So price is probably going to target that, and then we're going to get a relief off of that. Like, it's not really difficult once you like understand how the markets move and stuff, and you've seen this stuff play out. You can start to tell where the retracement move of a big move down or up is going to happen. If I were to have caught shorts today, I would have caught this one right here where we filled a 1 minute fair value gap. We created a bearish SMT off of these lows, and then we inversed this fair value gap. So I would have entered shorts there and taken it down there. But I have mixed feelings about like taking shorts on these days, because when we're already so far low in a premium, shorting isn't always the smartest idea, because you don't really know where price is going to reverse. But if you really thought that price was going to keep going lower, then yeah, you could have taken this. This is more of a continuation style trade, which is not something I usually do, but I might do this sometimes. I would like to point out as well, on these days, don't be going for home runs. Like, that's not going to happen. You want to catch like short trades. Like, you don't want to get greedy. So in this case, I would have called like a 1-to-1 or something onto like some liquidity point down there. Now, once I saw that all the liquidity has been swept and I haven't taken a trade, I'm like, okay, if there's a setup, I will de-risk and I'll try and find something. So what did I see? Price created a high time frame bullish SMT off of these lows. I also did think that these lows were going to be the bottom for a retrace to happen. So here, obviously, we have a bunch of 1 minute liquidity points, highs. All right, I'm not going to target all the way up there. You also have to like observe price action. It's not today. These days are not the easiest. If you're not confident, don't get in. But like, if you start seeing bottom wicks here and price action starts slowing down, and then you get like this inverse, this is where I entered here. And then obviously my stops were at that low, targeting just internal highs. In this case, it was a 5 minute fair value gap. And then after price took out these equal highs, I moved my stop loss to break even, because I wanted to secure the what I might have done wrong was that I think I targeted too much. Like, I should have just went for like a 1-to-1 today and just gotten this move and gotten over with it. I think I was going for a little bit too much. So even with what I went for, which was like a 1.68, even that could be too much. So just keep that in mind. Full take profit did end up hitting. It is what it is. It's just another probability day. Like, some days it'll go right to your CP, some days it'll swap you out break even, but I'm just focusing on following my rules. It was obviously a lower probability setup, which is why I de-risked, and setups like these need confidence. After that, I was done. I got off. There's no point in taking anything else. Even if I hadn't taken a trade, I wouldn't be taking anything else. Yeah, thank you guys for watching so much. Join the free Discord with the link in the description, and I'll see you guys next time. I'm out.